Welcome back. It's election counting day. It's result day, and I would say one of the most exciting days in 5 years for the country. The world is watching India's election, and the markets are also poised very, very closely to what is happening. Because remember, you've already had a blockbuster day today. Can you continue the momentum? Ajay Srivastava of MD Dimensions Consulting now joins the conversation. Ajay, great to have you on the show on what is a very, very exciting day. Now, the conversation we've been having in the studio is about whether you would see some money being taken off the table today after yesterday's stupendous run, and how much of it is going to be pegged to what the final number on the screen is. What's your take?
Good morning. I think, first of all, I think yesterday's buying, today's reactions are going to be more emotional, sentimental, momentum than going to be fundamental. I think that's the big difference. And for a serious investor, I think it's very important to understand that, yes, the euphoria of elections is good, everything is fine, but at what valuations are you buying? And the reality of the economy at the end of the day. And I think I'll just bring to a little bit of a party pooper to say that just today, Amul announced a 2 rupee increase per litre in price of milk, which just tells us inflation is all pervasive out there in the system. Therefore, the presumption that RBI will reduce rate is not going to happen. So you can buy on euphoria. And I think most stocks today, and I think nobody can argue, are really way out in terms of fundamental earning potential. Maybe a few sectors because of scarcity, because of lack of ownership. Let's take power, for instance. Its lack of ownership has got a great momentum on the summers. Defense, sheer lack of stocks availability at the point of time of liquidity. But by and large, the market, in our view, is priced to almost perfection at this point of time. So getting a return by buying on a day like this, in fact, there's more euphoria, I think will be very difficult for investors. This is a good time to pair off the losing proposition in your portfolio. And market was mature yesterday. If you noted, almost 40% of stocks went down yesterday, and which tells you a good story that we've got smart investors who are pulling out of losing stories on the back of euphoria. So market is very healthy, but I think you need to be careful that you don't get carried away and buy stocks at valuation which you will then have to sit for a longer time.
So just one follow-up there, Ajay. You're right. Not just Amul, Mother Dairy also increased its rates. NHAI has increased the price of tolls in a large part, and you might see tariff increases, etc. So the inflation part is bang on. But just to the point you made of the emotional response, if you are going to see a number on the screen with the election result in line with or maybe better than what the exit polls have talked about, do you think that you would see that emotional response?
I think you will see some emotional response, definitely, because market was been, at least the FIs have been sitting outside the market hoping that election will be more evenly poised or maybe even negative. So they will have to come in. They have sold in the last 2 months heavily, almost 60,000 crores. So eventually you need to either cover your shorts or to trade up. That's, I think, the point today will become that if there is a great euphoria, again, follow up yesterday, will the shorts come back to the system? I think that's a great leveler going to be in the second half. But really the point is that if people are out of the market, would they rush into the market? My answer perhaps is yes. If you're sitting in a good, healthy position, should you add up? Our answer to ourselves and our customers is certainly no. That, whether it's capital goods, whether it's a defense stocks, they have run up a fair bit. Only a couple of sectors that we still feel comfortable to buy in, as I said, power is one, and linked to the summer, the great air condition rush in this country, which is happening, some of the select stocks there. But by and large, you don't find a need, and you just saw the two-wheeler numbers coming in. So all three companies reported a decline year-on-year in two-wheeler numbers in the month of. So, so yes, euphoria is good. People are going to parliament, but your fundamentals are linked to what people are going to buy in the economy. They never bought the two-wheelers, so be careful.
Got it. Ajay Srivastava, Neeraj here, good morning. 20 times, 20 half times Nifty. Since you don't have Nifty futures in your portfolio, I'm trying to think, while Ajay Srivastava may be not completely bullish, he's certainly holding on to some of his key bets despite the market-wide valuation view that he has. What are those? Where should people stay invested or maybe even buy today while the Nifty may do what it does?
See, the great story for last year continues to be yesterday is the PSU story. For you, there are a lot of, either you can buy directly or you can buy things like Bharat ETF, where we have a position outstanding quite large. So, I think the PSU story is there for the thing. The second is re-rating of, the nationalized banks. I think this year or this term of the government, something serious is going to happen to these banks at this point of time. They're poised very well in financials. but they need to be get out in the private sector. I think you would see some upside coming there as well. So, so surrogate wise, if you look at it, PSU, either ETFs or PSU stocks or mutual fund, whichever way you want to invest, this is a perfect kind of zone. This is the safest zone to be in because valuations are still lower compared to the rest of the market. The performance is good at this point of time, and you will see some government initiatives. So I think the whole PSU space, the whole power space is one thing we are heavily concentrated, and we keep going with, as I said, capital goods and defense. There's no need to sell because there are no new stocks coming into the market. The new stocks which came didn't have a great traction. So I think you have the same old aircraft, shipyard, etc., which continue and scarcity element. So our positioning is very simple. A lot of PSU driven, a lot of bank driven. In the last 2 months, as I said, we have went into a lot into banks. Given the capital goods continues at this point of time. Consumer is almost zero. If it was, it is. I am sure it is zero at this point of time. Or we have sold off everything at this point of time. Auto is zero at this point of time. We have just sold off all our two-wheelers stocks. Trucks, yes, we have got stocks at this point of time. And a lot of restructuring stories. I think that's the game is going to be that a lot of companies are going to demerge their businesses and give you a lot of value. So I think there's a separate block of investment portfolio which comprises the restructuring stories. And that's really the end of the way we look at the market.
Very quickly, from all the sectors that you mentioned are across all market caps, from broader markets to large cap names. At this juncture, keeping market cap in mind, would you prefer playing the sectors you mentioned through the large cap space, or would you stick with the broader market names?
I think, that's something, luckily, like power sector, you really have only large cap at the end of the day. If you're taking off the distribution and the generating companies. So you're really in a safe zone with the large cap at this point of time. In the mid cap segment, I think there are few capital goods is where you want to play the mid cap segment at this point of time. And defense, very few mid cap segments at this point of time. So, and the PSU banks, you may classify them one as a large cap, rest are mid cap. So I think you've got a basket sitting there, but primarily if I look at my portfolio and a recommendation is almost 70% large cap at this point of time and 30% is assorted stocks in the story. So another restructuring also, very large caps are going through restructuring at this point of time. And therefore even that model is working well for. So it's a large cap game for 2024 as far as we are concerned.
Okay, Ajay, we'll leave it at that. Thanks so much for taking the time out and being
You're
with
welcome.
us. Really
Have a good
appreciate
day.
your time. Yep, you too. Have a great day.